Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. And it is the end of the month, and a lot of traders are saying thank goodness it is the end of the month, because this has been one of the worst months in the last 4 or 5 years that I can remember in the markets, for the markets collapsing. On the screen you see a graph of the Dow. It's a daily chart of the Dow, and I have the lines drawn in terms of the Fibonacci lines. These are very important lines in terms of traders, professional traders look at all the time. And you can see when you get into this, between these two lines right here, the 50 and 61.8% lines, that's when you run into trouble normally. This to me was a sharp down move. This is the correction, and this is where it's going to have problems, somewhere between here and 16.7. So let's see how things play out today. We're a little lower today. I would not be so surprised to see maybe a couple more days chopping around and then eventually a turn back down when the next shoe falls in this scenario. So also note how the volume was decreasing on the rally. So really it was nothing. It wasn't heavy volume coming up here. It was light volume, heavier than normal, but still, given the huge move down here, this is very light volume, so it's not too exciting to get long. You don't want to be long this market, as the trend is clearly down and has been for quite some time. You've got both of our trade triangles, the monthly and the weekly, down minus 85, indicating a strong downtrend, and you want to be short or out of the market right now. Pretty much the same picture with the S&P 500. You've had the sharp down move, slight correction. If we put in our Fibonacci, and how you do that is very simply with Market Club. You click here, click on the high point, drag it down to the low point, and you can see somewhere between the 50 and 61.8%. So we may see a little further rally, maybe up to 2,000, but I think it's going to be very hard pressed to get above that level, and I think you will see professional selling. Right now we're still minus 85, indicating a strong downtrend, plus you're below the 50 line, indicating a downtrend also. We'll do the same thing with the NASDAQ, and we'll take our Fibonacci tool, click here, drag to the lows, and you can see we're right in that zone, maybe a little bit above that zone, but nonetheless this is where the market should have problems, and I expect it to turn down once again. Same weekly and monthly, and also we're below the 50 line. So the trend is clearly down here. Look for it to run out of gas in the next few days and start moving back down again. Now this is just the reverse with the euro dollar. You can see how it's improved against the dollar. The euro has improved against the dollar, and you can see this little sort of rhythm that this market has created for itself, and that is not so unusual. So you get sort of lows. You have a low here. So we're coming into a low period again, where I expect we will see this market once again resume its upward trend. What you want to watch is the daily trade triangle. Once that turns green, then you want to get long the euro and short the dollar. We're back on support on the 50 line, which means this is a good area to watch, just like this was and this was. So let's see how that plays out. This is the gold market. A lot of people moved into gold thinking that it's going to shoot up. It did shoot up, but what I want to share with you today is a couple of things. One is we have a period here. We're right on support at 50. We have a weekly trade triangle right here, which is certainly positive. We're just waiting for the daily to turn green. Remember we use the weekly for trend and the daily for timing. But what I want to share with you today is something very, very important. So you're looking about the 1,140 level, 40.7 level as an area. If it goes over there, then I think we'll see the market continue up. But again, what you want to look at more importantly is this point right here, and that is the trend line that just perfectly matches the 3 points. Remember we talked about three, it has to touch 3 points to be very valid. So here's the first point right here, here, and here. So if we see this market go over the 1,160 level, it's really, so like this, boom, it breaks the trend line and really starts to accelerate to the upside. Watch that very, very carefully in the weeks to come. So let's say 1160 is a key point. Watch it very carefully for a close over that level, and we're on our way. Trend is positive for the weekly right here. Just wait for this daily to turn up. This is crude oil. Crude oil's had a obviously a pop from a $38 level. Let's just put a candlestick chart on. You can see it's going higher. This market's had a remarkable collapse, so to speak, but again, we can use our Fibonacci lines, put them in, and we can see the first lines of resistance, which are going to be around the 52, 53 level. Certainly the 50 level is going to be a big psychological level, and we're only just a few dollars away from that. So we're over the 50 line, indicating the trend is up. You can see our trend. We use the weekly and the daily for trend in this market. You can see the weekly kicked in just today at 52.98, kicked in at $46, and you can see we already have 60 cents profit in that, or $600 per contract. Again, I would say the 50 level is going to be a very big psychological area. I would not want to be short this market at the moment. We've had a heck of a week last week, a heck of a month this month, and September promises to offer some great opportunities. So stay tuned. We'll be with you all the way, and remember, Market Club has your back, and we're here to help you. Have a great trading day, everyone, and thanks for watching.